Look, I know you heard the crazy stories on how a lot of deals fall apart. Like somebody was buying a house, they got the house under contract, and then the deal fell apart. And it could be for a number of different reasons. It don't necessarily have to be the house. A lot of people automatically assume it's the house. What's wrong with the house? Sometimes it's not the house, sometimes it's the buyer's financing. And even still, with the buyer's financing, there's still a lot of things that could go wrong during a transaction. But I'm gonna tell you one of the main reasons why buyers can't get across the threshold to the closing table. That good old bank account. See, in order to get pre-approved and buy a house, you gotta have at least 2 months of bank statements. Now, if you don't buy a home in that first month, you're probably gonna have to submit another month's bank statement. So it's like a rolling 2 months of bank statements, if you will. It's not just the bank statements that's the problem, it's what's on them. It's what you're actually doing with your money, right? Now, here's a couple of things that people do with their money unknowingly, not bad things, but just things that can cause a problem in the underwriting process, if you will. So the first thing is cash deposits. See, the bank wants to have everything sourced, meaning they need to know where it came from and they need to show it coming into your account and then going out of your account. With cash deposits, you don't know where the cash came from. But what a lot of people do is keep cash under the mattress, we call it, or that cash in the shoebox, save for a rainy day, or this is how I saved up for my down payment to buy a house. So now I'ma just go deposit it into the bank account. No bueno. You gotta be careful when depositing cash. Make sure you talk to your loan officer and figure out what's the best thing to do, right? But cash deposits are definitely no good when it comes to purchasing your home. Let's say you don't have the money at all to purchase a home. You can get gift money from a family member in order to purchase a home. So if you coming up short, you could call your cousin and say, "Yo, bro, I'm a little tight right now. I need to borrow a couple pounds." Shout out to all the rich cousins out there. But the same rules apply. The money has to be sourced. It's got to come from somewhere. Your cousin can't just go deposit cash into the account and transfer it over to you. He's got to show like direct deposits coming into the bank account, or a check from an attorney, or even 401k. Now, wait a minute. Bet you didn't know that, did you? You can even use money from your 401k to purchase a home. Sorry, my daggone dog over here decided to drink water while I'm filming. A little thirsty? You done now? You finished? Thank you. If you check with your financial service provider or your HR department, they'll tell you how much of your 401k you can actually use to purchase a home. And it's sourced. It's source money. It's coming from it's coming from your 401k account and going into your bank account. Usually they do it by wire or by check. But yeah, again, as long as you can show it coming out of that account and going into this account, it's perfectly fine. All right, so here's another one that I know you didn't know about. Phantom monthly payments. The reason why I call them phantom monthly payments is because there's things in your bank account that you probably pay every month, but you don't even think about it, right? Or you don't even think that it's important to the situation, right? In terms of purchasing a home, like tax payments. They look at your credit report and see, they can see the credit cards that you have. They can see your car note. They can see your student loans, right? But there's things like tax payments to the IRS. They don't show up on your credit report. Like a lot of people call the IRS, they got a big tax bill. So you make a payment arrangement with the IRS that you pay on every month, right? So now when the bank looks at your bank statement and they see these IRS payments, it's not a red flag. It's not a bad thing necessarily, but it does count towards your debt to income ratio. It's not a bad thing that you're making payments on your tax bill. It's a good thing, but it does count towards your debt to income ratio, right? So there's certain monthly payments that are ongoing that the bank is going to have to count towards your DTI. And I'm gonna tell you another one. It's a sleeper. Those buy now, pay later payments like Klarna. I think Klarna, Affirm. You know what I'm talking about. But yeah, the bank looks at it as a credit card payment, and that counts towards your debt to income ratio. So these are things that when you're filling out an application and the lender is asking you, what your monthly payments are, or, anything, you kind of forget about those because it's really not a big deal. But once they find them, it could change everything. So the key here is that you want to be honest and open with your lender up front so that they're able to help you. A lot of lenders understand the guidelines of these programs. A lot of them understand how to move in and out of certain things. And that's why I say before you deposit any money or before you make any financial moves, it's important that you just consult with the lender first. Like sometimes we feel the pressure, like, oh, I gotta hurry up and make this deposit so I can buy this house. I'm under the gun, I'm under pressure, that pressure, and then you make the deposit, and then the deal's gone. So yeah, talk to your lender, man. I've been a real estate agent for 11 years now, and I've helped hundreds of families buy and sell real estate over the years. I've dealt with a lot of the different loan programs, FHA, conventionals, Fannie Mae, Freddie Mac, you name it, we've done it. And in fact, I just recently won the International Diamond Society Award with Coldwell Banker. Top 7% of real estate agents nationwide. Clap it up for me. Clap it up for me. And I can't lie, a lot of my success goes to the fact that, see, when I first started in real estate, it really wasn't just about showing houses for me. I really dove into the financial side because if I'm gonna help my people, I had to show them how to be able to get the money. I gotta show them that this is possible, that this is doable, right? The money is here, the banks wanna lend it, but you just have to do your part. And you gotta play by the rules. You gotta know the game. Listen, man, if you're thinking about purchasing your first home this year, don't hesitate to reach out. You can call the number at the bottom of the screen or click the link in my bio, schedule a 30-minute consultation with me and my team, and we want to help you win. We want to see you win. Don't forget to like, follow, and subscribe, and I'll see you on the next one. Later.